Good morning, good evening, wherever in the world you're watching from. It's Business Morning, live on Channels Television. I'm Ladi Williams. First off, let's take a look at what's happening with the markets now. We see oil prices were little changed today in early trade, headed for their first weekly gain in 5 weeks, underpinned by a weaker U.S. dollar and the possibility that OPEC Plus may agree to cut crude output when it meets on October 5th. U.S. West Texas Intermediate crude futures for November delivery rose 6 cents to close at $81.29 a barrel, falling 92 cents in the previous session. Brent crude futures for November, which expire today, inched up 2 cents to $86.51 a barrel, losing about 83 cents in the previous session. The more active December contract gained about 1 cent to $87.19 a barrel. Both Brent and WTI on track to rise by about 3% for the week, the first weekly rise since August after hitting 9-month lows earlier this week. For all of September, Brent is set to drop by 8%, down for a fourth month. During the third quarter, Brent has plunged about 23%, its first quarterly loss since the fourth quarter of 2021. Now let's move on to the grain markets now, where soybean, the Chicago soybean futures inch higher on Thursday, supported by strong export sales after lower trade much of the week as harvest progress across the U.S. Midwest through some farmers report about lower than anticipated yields. That's according to analysts. Corn and wheat eased ahead of today's U.S. Department of Agriculture quarterly U.S. grain stocks and annual small grains report, pressured by a rising dollar and growing investor worries about an economic recession through fears of more disruption to Black Sea trade underpinned both markets. The most active soybean contract on the Chicago Board of Trade, SV1, added about 2 cents to $14.10 a bushel after climbing $14.23 earlier in this session. And Africa's power situation and opportunities for investment came under spotlight at the International Trade and Investment Forum 2022, organized by the Foreign Investment Network on the sidelines of the UN General Assembly in New York. Attending this year's event were global leaders, finance experts, and bright minds in forward-thinking solutions for Africa's perennial power problem. Do take a listen.
Dr. Ngozi Okonjo.
The FIN International Trade and Investment Forum 2022, with the theme Power for Africa, was organized to serve as a launching pad for the international business community to explore investment opportunities for Africa's power sector.
Thank you, Susan.
Discussions were broken into seveul panels to address the need for international partnerships. Direct Investment Consultants and Group Chairman, Foreign Investment Network, Olayinka Fayomi, and U.S. Councilwoman Mercedes Narcisse set the scene for the program.
We have the burden to help 43 million youth in Africa who are jobless today just because they lack opportunity to one, opportunity to electricity, two, opportunity to technology knowledge. And I'm hoping that some of us today here will be able to help us to get to that level.
Well, my job is primarily passing laws and passing the city's budget. I firmly believe that what we do at the city council does have a profound effect on international finance. Our work in the City Council can accelerate economic activity through business development and fostering the technological innovations, which I believe in, and improve economic and financial condition at home here in our city, has a tremendous effect on the strength of the global economy.
With 770 million Africans living without electricity, and much of that number in sub-Saharan Africa, former Nigerian President Olusegun Obasanjo, who joined the program virtually, says it's imperative that Africa and her partners work together to generate enough power to help African development.
I personally believe that the resources are out there. All we need to do is to create the conducive environment for investment to come into Africa, for power generation, power distribution, and of course, power transmission.
Director General of the World Trade Organization, Dr. Ngozi Okonjo-Iweala, who also joined virtually, highlighted the annual investment gap for Africa, hence the need for improved energy access to improve well-being on the continent.
We know that the International Energy Agency has estimated a $28 billion annual investment gap for energy for the continent up to 2030. We also know we cannot industrialize or have a solid continental manufacturing base without energy. We cannot increase our share of world trade without adding more value to our products through that manufacturing base. In other words, our future well-being on the continent is limited by improved energy access.
President and CEO of Amelia, Chetan Dubey, gives artificial intelligence, which will most likely determine the future of workforce in the world and where Africa will be by then.
Are not necessarily clear as to how to take advantage of those opportunities. So forums like this really provide an opportunity to think about communication channels and education so that companies, so that entrepreneurs find the ways to take advantage of the opportunities in Africa.
The program continues with panel sessions, which further discuss Africa's energy needs, and ends with an award ceremony to distinguished persons in various industries.
Congratulations. Okay, to ONS Triumph Limited, congratulations. Okay.
All right, now to our first conversation. Facilitating seamless trade is key for any economy looking to grow in revenue and development, and dry ports are getting attention these days. Let's talk about this and other matters with Nigeria's trade. Now we have Honorable Ahmed Rabiu, MD Dollar Inland Dry Port Nigeria Limited, joining us right there from our Kano studio. Great to have you on the program.
Yeah. Is it so clear?
So Nigeria's trade with other African countries amounted to about 1.305 trillion out of the 25.84 trillion worth of foreign trade recorded from January to June 2022. This shows Nigeria's intra-Africa trade shrank further despite the AFCFTA. What would you say are the hurdles here? We should be seeing more trade with other African countries. I don't know if you can hear me, Honorable Rabiu. Hello, sir, can you hear me? All right, okay, it seems, Honorable Rabiu, can you hear me? Hello, Honorable Rabiu. Okay, it seems we're having some communication breakdown there, but we'll try and get Honorable Rabiu back, but we've been talking about dry ports for a while now. We're looking at how this can potentially solve Nigeria's trade issues, and we can actually get more trade between Nigeria and other African countries at this time, because the data is showing that Nigeria's trade with other African countries is not where it should be at the moment. Well, we'll try and get Honorable Rabiu back. We'll take a quick break now, and we'll try again and see if we can get Honorable Rabiu. But I think I have my other guest joining me now, Ikechi Uko, organizer of Kwaba Travel. I don't know if I have Ikechi there. Okay, great to have you on the program. So I'm having to come to you now to talk about tourism. I was supposed to have you in the other segment, but Nigeria's tourism at this point is not where it should be. And I don't know if you can hear me, Mr. Ikechi Uko. Can you hear me?
Yes, I can.
Yeah, so looking at where we are now, talking about Nigeria's tourism, how would you say we're faring at this time?
Okay, yesterday, 27th, was World Tourism Day. It's a great day for those of us in tourism to celebrate tourism. And September 27th was initiated by a Nigerian. So it's a great day for Nigeria. The whole world celebrates it, and a Nigerian started it. Probably that's the best news for that day. because our tourism isn't doing very well as at now. For outbound tourists, people are flying out in huge numbers. The aircraft out of Nigeria is full. They are all full. And they are charging premium, very expensive. Yet, our local airlines are not doing well. If you had gone to the airports this morning, usually at MM2, there'll be like 7 flights in the morning, but today, yesterday, the day before, you have maybe 2 flights leaving in the morning. So that's the easiest way you can tell how people are moving. Outbound is doing very well. The hotels in Lagos and Abuja are doing very well, but our resorts, the ones out of the big cities, the leisure tourists, our tourism sites, the whole tourism energy needs a lot of help as at now. We are not in the best of health for tourism business in Nigeria.
And obviously, with tourism, it has a lot of potential to bring the much-needed revenue we need at this time. But according to the World Travel and Tourism Council Economic Impact Report, it says that Nigeria's tourism sector is expected to create about 2.6 million new jobs over the next decade, doubling the number of those employed within the sector by 2032. How do you see us making this projection a reality?
We can actually do better than that. Considering the potential, there are 200 million people in Nigeria. Just getting 30 million of us move around every other day can employ maybe 10% of that to service that number. Nigerians love life. Nigerians love to see new places, enjoy new places. And those numbers to me are very small if we actually begin to scrape a little bit of the potential that tourism has in Nigeria. I'll give you a good example. The big Calabar Carnival. In December, anybody, in the past years, anybody that visits Cross River in December, you will see the power of tourism. For the whole month of December, you don't have people, extreme hunger, crime levels are low. Everybody finds one way or the other to employ himself, painting faces, making souvenirs, providing accommodation for visitors. Tourism employs everybody, even those without formal education, what most professionals will call informal education. Masquerading, dancing, comedy shows. The amount of job tourism can create in this country is immense. So those figures are not actually big figures. If we excite the potential of the market, we employ a lot more people, I can tell you that. And you live in Lagos, you know what happens in December, coming very soon. There is traffic jam everywhere.
Right.
What causes those jams is the entertainment spirit, the so-called dirty December, that gets everybody on the move, that actually employs the whole city. So tourism is the easiest way to get our youth employed, to get our economy running full steam. You need to excite the tourism environment.
Quite interesting. I've not heard that phrase, Dirty December, in a while, and I wonder if we're going to be using it this year with all the headwinds, we've seen in 2022. But how can we, market Nigeria to the world at this time? Make it that, destination hub.
First of all, is that tourism cannot work, from our example, without the will and the policy of the government. The government of any country has to decide, look, we need to position and market ourselves. I do Akwaaba Travel Market, and you see that Dubai Tourism, that's a government agency, comes with all the power. South Africa Tourism comes with all its power. Now we have the Turkish people coming with the government support. So why do we think that in Nigeria, only the private sector should drive tourism? The private sector, they are business people. You can only think about yourself, your staff, and your bills to pay. There needs to be that engagement that needs government support. Government owns the brand of the country. Government owns the foreign policy instrument. Government owns the licensing power to create open skies, to bring aviation. I cannot create a national carrier. I cannot actually give visa. The little things, problems we have in Nigeria are in the hands of government to solve. I cannot on my own solve the security issue. I cannot create a national brand that I can drive all over the world. So those of us that are doing this, we work with other countries. We know that there needs to be the will of the government in power and also policy. Example, Lagos State and Cross River that are doing very well in tourism, it was driven and is still being driven by government policy and government support.
And looking at 2022, obviously global inflation has been the major pain in everyone's neck at this point. But what do you think players in your industry can do to cushion the effect of rising prices? Because at the end of the day, consumer demand is being wrecked at this point.
That also is not in our power. We don't control Forex. We don't control the assets.
But what are you guys doing, with what you have, basically?
For us, we have to sell the product to the... when you do packages, you look for how you can create discount to get more people to travel. You do the negotiations that are necessary. Everybody finds the dollar very high. So what do? You get your partners to subsidize. Airlines are not likely to subsidize now going out of Nigeria because they are full to the brim. So they are charging premium. So you have to get your hotel partners, you have to get the top rating costs, you have to make sacrifices until there has to be some stability. There is nothing else you could do. For domestic tourism, you have to hire your own security. You have to do everything now. So for now, we are just staying there to survive, putting together packages that people will buy. There is a need. People want to travel. We know that. Nigerians love to travel. So we have to take advantage of that and give them extremely favorable rates that will enable them still fulfill all their desires. But we do not control all those indices. But we can only use our leverage, our power of negotiations, and our network to make it easier for more people to travel.
Quite interesting. But looking at the tourism industry right now, what would you say are some hidden opportunities, some untapped sectors in the tourism industry at this point?
I'll give you a good example. The Lagos waterfront, the beaches, that's a minefield. And if you have been sampling some of the products there, I don't want to name them. They are all actually full. They are doing very well. That is just the waterfront. And Lagos is surrounded by water. There is water and there is land everywhere. So that already is a potential that is being tapped and is going to grow bigger. Now, there is also the traditional aspect of it, the cultural festivals. We have to fix their times, scale them. Now you take entertainment. Nigeria has entertainment power all over Africa. Lagos is entertainment capital of Africa. So those ones are easy. They are low-hanging fruit for us to exploit. We'll drive it, we'll squeeze it, we'll milk it. People will come just for entertainment in Nigeria. Nigerian music, Nigerian movie. Then we have the meetings and conferencing. That's also another thing that people all over the world will want to, those are markets that are obligatory. If you have a conference, you have a conference. You will find your way to go to that conference. Then there is the other part also that we have not utilized, religion. We are extremely religious. The world knows that. So we should be able to turn that into a resource. Some churches and some organizations have exploited that and done very well. Before COVID, the biggest tourism attraction in Lagos was a church that brings people from all over Africa and the world non-stop. So there are little things, festivals, entertainment, the beachfront, religion, meetings, incentives, conferences, and exhibition. We call that MICE. Those are the strong areas that we can use to drive our tourism. And they are not very difficult to develop. Those are easy, low-hanging fruits.
Quite interesting. Well, I guess we have quite a lot to milk and we have a lot to look into. Thank you so much, Mr. Ikechu, co-organizer, Akwaaba Travel Market. It was great having you on the program.
Thank you for the opportunity.
Thank you. All right, we'll take a break now. When we come back, we'll try and get our guest again from our Kano studios to talk about dry ports and how I can help Nigeria's trade. That's the moment to stay with us. This is Business Morning. Welcome back. Let's try and get back that trade conversation. We still have Honorable Ahmed Rabiu join us from our Kano studio. Honorable Ahmed, I don't know if you can hear me now.
I'm hearing you loud and clear. Thank you for having me.
Fantastic. So the first time I was asking that, we've seen Nigeria's trade with other African countries, and it's sitting at 1.305 trillion naira compared to the 25.84 trillion worth of foreign trade. And we're still lagging behind, looking at trade with other African countries. With the AFCFTA, we should be seeing a hike in that level of trade by now.
Okay, do I go on?
Yes, please.
Okay, thank you so very much, and thank you for having me. There have been, before the African Continental Free Trade Area, a number of schemes that were intended to promote trade among African countries. But this was being done without addressing what will really make the trade happen. From the beginning, the issue of currency itself, especially recently, is a major issue because if we are trading as it is today in dollars, and then it makes the products of one country while taken to the other to be excessively very costly, it doesn't help matters. But if we were trading on the same currency, that would have helped us. And our, therefore, units of comparison would be the same basis. And therefore, that is the very first one. But the major one, even, is infrastructure. We have challenges reaching our neighbors by road. It is only President Muhammad Buhari that have brought the initiative now of linking our first neighbor, Niger, by rail, coming in from Lagos to Kano to Maradi. And hopeful that with partnership with other African countries, the rail will extend and cover the rest of Africa, particularly the Sahara zone, where we used to have most of them relying on us for all the trade. And the linkages also by air are not even there for people to go and have the connection to deal with each other. And then attractiveness in terms of the value, like you have in part of the Francophone, particularly where the French subsidizes their imports, and therefore imports from their closed-door neighbor becomes more costly than imports from France and things like that. So largely, the things that have made it difficult for us to grow the trade to the level that we want have been those issues of infrastructure. We are hopeful that with the commitment of African countries to Africa Continental Free Trade Area, the issues of security, which has been the major other issue. For instance, you get to, from Nigeria, getting to Chad, for instance, there are challenges. Getting to Cameroon, there are challenges. And then getting into Cameroon for a very long distance, there are challenges of the bandits, Boko Haram, and the rest of issues. So these issues really continue to retard the volume of trade among us. And so the benefit that we would have exploited, we are not able to exploit them because of infrastructure. Right. We are not able to deliver. And then these other inhibitions.
Right. Well, quite a number of issues. But let me take you back to the, the currency issue. We're at a time where the U.S. dollar is on a rampage right now, hammering every other currency. Is it time for Africa to take another currency now seriously for intra-Africa trade? Should we try and move away, from over-reliance on the U.S. dollar at this point?
Absolutely. When Europe decided to create the euro, we talked aloud. We had, before European countries come together to do the euro, we had talked of the even West African unit of account, WAWA. We had so many things, and I think it was just this year that the African currency was to come into force, and somehow there are some challenges. It has not, but we definitely need our currency. That's the only basis for which we'll be trading among ourselves like to like. And then, of course, we will now be left with other issues of infrastructure, which we believe the countries will partner to meet each other, at their borders, and all partner to even have the rich ones among them and have other investors from wherever to come in, and African investors to also lay rail lines, do dual carriage or very standard access roads, and also ensure air links. These are fundamental issues. So I believe it is time now for Africa to have its own currency.
Right. Well, we'll keep watching to see how that actually plays out for Africa. But there are a lot of conversations now, about dry ports. And I know you are the MD of the Adana Dry Port. What would you say is the potential here for dry ports to actually help trade in Nigeria?
Dala Island Dry Port, strategically located, has in Kano, that has been the center of commerce for sub-Saharan Africa, that had been the hub for trans-Saharan trade, really stand to benefit from trade within Nigeria, Kano itself and its neighboring states within Nigeria, and the neighboring African countries that are not connected, do not have waterfront. There is a rule that those of us that have waterfront must allow countries that do not have water frontage to pass their goods through us. The Dala Dry Port will be the transit point for all these our neighboring countries, particularly Niger, Chad, and the Cameroon, and all the other countries in the Sahara that will find dealing with us better and easier. And I believe with the kind of facility we have put in place, 200 hectares of land with 35 hectares itself, the port itself, enough stacking area, enough cargo handling equipment, enough personnel positioned to ensure efficiency in cargo delivery and also competitiveness, reduction in the cost of doing business, so that whoever comes this way will really say it is better that he did come this way rather than the other part of the coast in Africa. So the Island Dry Port has this potential and intends to grow it using the rail revolution project of the track being laid into Niger, and which is going to be grown with partnership with other African countries. The roads have been mended here and there, and the security issues have been addressed. The Dala Dry Port will definitely be a hub. Exportation of non-oil exports, largely, Kano accounts for about 70–75% of the entire non-oil export getting out of the country. And as you are aware, about 2.6 billion was generated in the first half of this year from non-oil export. And by virtue of that development, it was done when there was no facility like Dala. People had to transport their goods in difficult ways into the seaport cities that have gridlock challenges, the Apapa, the Tinkan, and even going to Oni. There are great challenges getting the cargo to the seaport cities. Every exporter will now take his cargo only to Dala Island Dry Port, and by the time it gets to Dala Dry Port, the combined transport document will be issued, and the cargo will be deemed as having been exported. And the person can even negotiate the document and get part of the money back from the bank. By the time we really get properly in business, as we are already warming up now, exporters particularly, export will be grown in several 1,000%, because the difficulties now are a hindrance. Our facility will make it easier and cheaper, and therefore we will be able to access more markets abroad. All our neighbors will be able also to access more markets, and therefore we'll grow export very, very much, and that will help us. We have enjoyed favorable balance of trade in the last 2 quarters of the year, the first and second quarter, and it will be much, much more by the time exportation begins to be processed through Dala Island Dry Port.
Right, we need more exportation at this time. But another limitation that I see for dry ports is infrastructure. If you don't have the right train and road infrastructure, then it seems the dry ports will just remain dry.
The good thing about it is we have seen Muhammadu Buhari's Rail Revolution project laying the standard gauge laying from a rail line from Lagos to Kano, going to Dambata, my home, and going into Niger, that and to Daura and to Niger. This advantage is a great incentive. It will attract more investments on the rail, private investment. Already, the law established in the railway allows private sector participation in delivering rail services. Even as we speak now, there are at least 2 operators that are doing that. And the standard gauge rail lines are being mended, and we believe as the Prime Minister has shown commitment. Just last week, we saw him talking about it. We have seen really the robust commitment of the Minister of Transportation to really make the rail, standard gauge rail, functional. We believe the rail issue is almost in place. They are just addressing issue of security to ensure that life and properties are safe because of the challenges we have in the country. And I'm hopeful from the commitment of the Minister that we should see that happen soon. Road issues have been attended to here and there. So this remains a recurrent dismal though, but we have seen actions happening. And we believe the actions will continue, and sometime soon we shall have the linkages. I did mention that security is an issue, but when even getting into from here to N'Djamena, for instance, the capital of the Chad Republic, is a major issue. More than 3/4 of the road is bad. And when you talk of the Cameroon, much worse. In Niger, the same thing. Niger would have been that easy, but you go into Niger, we were together with the CGC of the Nigerian Customs, and it was so sad that around Atamburum, it is better you walk than you go onto any vehicle. So definitely we are on course. The infrastructure issue, we are confident. The government of the day has been doing some very clear commitment to develop the road infrastructure.
Right.
If you like other issues, maybe you talk of power and the rest, but more importantly, the Aled Dry Port addresses the issue of logistics. Those other issues of production to reduce costs also matter to us, but we are more concerned about the road, the logistics infrastructure. And
right.
this
much,
commitment, we have seen it happening.
Quite a couple of issues to address there, but what would you say is the revenue-generating potential of a dry port?
Humongous, if you like, humongous. It is huge because let me tell you what happens in our waterfront terminal, that is the seaport. Because of inefficiency, the shipping lines are making more money from demurrage, rent being charged on undelivered container or container holding than on the sea voyage. By the time we begin to operate as a transit port, making sure that, as I said, we have 35 hectares for the port, 165 hectares for special economic zone. We are setting a scheme of quick turnaround and operating typically as a transit port. We are going to grow the trade to the extent that our revenue and boost, the way we shall boost the Nigerian economy, the Kano economy will be really humongous. We are hopeful that anybody who perhaps spends about $1 million on a particular service from the seaport of waterfront terminals will spend less than 1/3 of that amount while operating through us. A lot of work is happening from the government agencies, and we are hopeful that the revenue that we shall attract to the state and to the federal government will be very, very big. And we are ourselves at the beginning growing our own base in terms of services that we shall render to ensure efficiency of service delivery and also competitiveness.
All right, we'll keep watching to see how we exploit more of the potential with dry ports. Thank you so much, Honorable Ahmed Rabiu, MD, Dala Inland Dry Port Nigeria Limited. It was great having you on the program.
Thank you very much for having me, and God bless.
All right. So now we saw the markets, we're heading to the markets now. We saw that I think close well. Talking about the equities market, I have Will joining me now to break it down.
Ladi, good morning.
Yeah, good morning, Will, from this side of town.
I'm bringing, is this semi-good news? Or is it
sort
of good news? But the market is not giving us the required, benefits that we're looking for at the moment.
And I'm wondering when.
It's just buy the dip. Buy the dip. Be an investor. Have the mindset of an investor. Don't get, shaky at this moment. I think this is the right time.
And it depends on the kind of investor you are.
Yes, you need to get the skills. You need to get the training. You need to know when to enter the market and when to leave the market.
Right.
I think that's what investors need at this moment, because just going in and just coming out is you're gonna get fingers burned, little fingers burned. So equities opened yesterday really late, but we're going to start with the fixed income market, where we saw the money market liquidity open the day with a repurchase balance of about 294 billion naira. That's a decrease from Wednesday's position as banks funded their obligations. Now the bond market, we saw it opened the day on a calm note, not much activity going on there. We saw activity across the benchmark of an an emphasis on the 2037 paper there, and the long tenor paper hit 15%, point mark yesterday due to weak demand, and again because of the interest rate hike by the CBN. Now we begin to see the impact in that market. Now the 2042 bond paper, hit, was also offered at 14.3%. Now limited offers was also there at the NTB auction. We also saw it quiet trading at that point yesterday. Markets demanded the long-term paper, that's the newly issued one-year paper, at 12% had the highest hits. Investors are beginning to take that advantage of that interest rate hike there to buy into that bond. Now we'll move over to the CBN special bills. We're seeing some, trickles, some uptick in that space as well. Sell-offs are happening, a little bit of, weak demand there, but it's happening, and the market's really moving towards profiting from the CBN monetary policy's rate hike. Now we have Ifeoma Onyejekwe. She's a fixed income dealer at UBA to give us more insights of what really happened in the market. Good morning, Ifeoma. How are you doing today?
Good morning, Will. Thank you so much for having me.
It's good to have you, Ifeoma. Now, Ifeoma, I guess we're already seeing the impact, as I was talking, of the CBN's 15.5% interest rate hike in the demand for treasury bills. Now, for the bond space as well. Now, this is especially following Wednesday's primary market auction, where we saw stop rates increase significantly. Can you tell us more about that?
Yes, Will. This week has been a very, very interesting week in the market. We yields and interest rate hiking across different securities after the central bank hike. Now, we know that they hiked the MPR to 15.5 from 14%. And according to their reasons, it's in a bid to tame inflation, which hit a 17-year high of 20.52 in August 2022. We also saw that the Monetary Policy Committee increased the cash reserve ratio, which is the amount of money that banks have to keep at the central bank, to 32.5%. From 27.5%, and the short window that the CBN gave to banks to match their cash reserves ratio to the new levels, it has definitely impacted system liquidity, which will likely affect financial institutions being at the FS auction today. And you rightly said that the repurchase the amount at the repo window was a lot. That was because banks had to be there to fund their obligation and as well meet up the new levels of the CRR.
Okay, so
I
just want to know, let me just cut here. How are banks really trying to meet up with this demand? It was effective yesterday. How are banks really trying to catch up with this obligation that the CBN?
We saw a lot of banks at the CBN repo window as well as the CBN standing lending facility window. So a lot of banks went to borrow from CBN in order to match up with this short window to match up their new CRR rates.
Wow. So what should we expect from markets seeing the new interest rate hikes? Do we expect like a big jump in the market, like influx of investors coming in to take opportunity? Because we're already seeing that for the long end of the paper, for the long end of the NTB curve, we're seeing the 12% jump there, and investors are already cashing into that. Should we expect more of this? How long will that be sustained for?
We will definitely expect more. We've seen, like you said, a lot of investors have been coming in, more local investors, but we'll also likely see a return of foreign investors to invest in Nigerian securities as rates across board become more attractive. Although we'll still see some cautiousness in foreign investors coming into our market as our presidential elections draw closer.
Okay. So what's your outlook for possibly next week? Just a brief one.
Tightness, a lot of tightness, and we'll also see, increase in yields and interest rates, but generally tightness in the market, a lot of tightness. System liquidity is going to be very tight.
Wow. I don't know if we're going to look forward to that, Ifeoma, but anyway, thank you so much, Ifeoma Onyejekwe, fixed income dealer at UBA, for joining us and sharing your thoughts with us. Now, the equities markets ended the day 0.4% lower, settling below the 49,000 level. Now we are 48,964.83 points, and one of our analysts did say that we probably hit the support level of 48,500 points. We're hoping we don't go below that. That's going to be a big, if we can't resist that, if investors don't buy into the market and keep selling off, the market is going to have a thing or two to run for its money, basically. So volume rose yesterday to 220 million units of shares valued at 1.25 billion naira, and all executed in 3,195 deals. Now, month-to-date loss increased significantly because the market lost about 112 billion naira yesterday. Month-to-date loss printed 1.8%. Now, year-to-date is now back to 14.6%, moderating there, fluctuating between the 14 and 15% levels. We're hoping that that doesn't happen now. We saw in the sector's performance, it was really, really down yesterday. Banking was down, consumer goods was down. Now, GTCO and UBA contributed to this. Consumer goods, Nestle was down 10% yesterday. We saw Cadbury also down. And now industrial goods was unchanged from the figures it closed on Wednesday. Now, insurance was down 0.58%. Oil and gas, all there. We're just hoping that the market rebounds today and gives us a bit of something to, look forward to. But I don't know. The week closes. We are headed for definitely for a week or a weekly loss. But if the market can close positive today, I know it's going to be good for some investors, Ladi. Don't you think so?
Yeah, because even though it's a downtrend, there's some traders actually making profit.
But yes, definitely.
Even in a bear market, there is profit to be made. Thank you so much, Will.
Thank you, Lord.
All right, now, after the break, we head on to London. That's the moment. Just stay with us. This is Business Morning. Welcome back. Still watching Business Morning live on Channels Television. Now we head on to London with Juliana right there. Great to have you, Juliana. It's been a while. Great to see you again from this side. So we have some good news. Britain's economy grew by about 0.2% in the 3 months to June, reversing the earlier estimate of about 0.1% contraction. It seems the BOE's prediction didn't come true this time.
You're absolutely right. Good morning, Laddie. It's great to chat with you too. We have had some revised data from the Office for National Statistics for Q2, so it's the 3 months till the end of June. Now, previously when we got this data, it was suggested that the GDP fell by 0.1%. Because the Bank of England forecast that in Q3 we would also contract, we would have been in recession. But alas, that is not the case. The figures have come in at a 0.2% gain. I think the upward trend was pretty much down to pharmaceutical, health and the financial sectors. And that 0.2% means that even if, and it does appear likely, that in Q3 there would be a decline, we wouldn't be in recession, because in the UK you need 2 quarterly falls for us to be in a technical recession. So that is really good news, and I'm sure a huge sigh of relief for the embattled Chancellor Kwasi Kwarteng and the Prime Minister Liz Truss. The only thing is, as we know, the economy is not in great shape now. It took several months for us to get back to our pre-pandemic size, and we were 0.6% higher than we were in March 2020, when the then Prime Minister Boris Johnson decided to lock down the country. But according to today's data, we're actually much further behind than we initially estimated by 0.2%. So good news in one hand, but we've still got a lot of work to do, a lot more spending for us to be back and healthy again.
Right, quite a lot of spending to do. And we saw the pound actually recovered to a week high. Well, I guess some traders would be saying maybe the UK might be a buy, right now with this relief.
There has been a massive relief again, some extra good news. I'm just wondering if this is going to cool down the hysteria from the media, because let me tell you, it is definitely being led by the media in the UK. But you're absolutely right. Today is 7 days since, in fact, it's probably about this time that the Chancellor announced that mini budget, which led to the pound on Monday declining to its lowest level against the dollar in decades, to about $1.03. But there has been a relief rally suddenly overnight, and the pound in Asian market trading was at about $1.12. That is significant, and that does mean that it's the highest weekly gain for the pound since early 2020, a 2.3% gain. It's since kind of steadied at about $1.11. But this is good news. This is significant news, and again, it's much higher than it was before the budget. So I think Kwasi and Liz will be keeping their fingers crossly tightened, hoping that perhaps their risk risk of £45 billion of tax cuts will pay off. They are said to have a meeting today with an independent fiscal watchdog, the Office for Budget Responsibility, so that they can kind of map out how they are going to pay for these tax cuts. But we'll have to wait and see. But yes, we can, rest assured that during the weekend, the pound is steady, just.
The pound is steady. All right, Julia, thank you so much. We hope it continues into next week. Thank you.
Thank you.
All right, now let's take a look at what's happening in other markets. Talking about the crypto space there, we see the Fear Greed Index there. That's it, 21 points there. We were 20, up 22 a few days ago, but now it's back to 21. Extreme fear shows that the markets are still quite not sure of the direction of Bitcoin. But the crypto market actually did do well compared to what happened in the U.S. Markets yesterday. The U.S. markets were completely hammered, talking about the NASDAQ. So there might be some kind of decoupling with the crypto market and U.S. markets there. Talking about traditional markets. Market cap, $944.23 billion, up about 0.78%. Volume traded in the total crypto space is down about 14%, talking about Bitcoin and the altcoins. Bitcoin dominance sits at 39.51%. Let's look at the price of Bitcoin now. There we see it's $19,436. Down about 0.18%, but much better than what we saw in the markets yesterday with the sell-offs continuing from Thursday. And we see the U.S. futures still tending towards sell-offs this morning, but we see Bitcoin quite stable. Volume traded, we see Ethereum now, that's down about 0.09%. Volume traded in Ethereum, $13.71 billion. Let's bring in Rume Ofi now, digital market analyst. Bring us up to speed. Hello, Rume, great to have you.
Good morning, Larry. Welcome back.
Thank you. Great to be back. So, Rume, most traders always have that regret, in any market. I should have sold the top. I should have seen that the downtrend would come at some point, but now it's a bear market, almost everywhere except you're in cash, talking about the US dollar. But what's the best strategy, to getting out before the next bull market?
Thank you very much, Larry. That's a fantastic question. A lot of people don't usually understand this. I think I've seen about 3 bear market now, and I hope to see more. The truth is, this is not a financial advice. So I'm not your financial advisor. So I believe that the internet is there, and even at that, people need to ask questions, ask those that are involved the right questions. So, for example, website like CoinMarketCap that shows the data of what has been happening. For example, the supply of the particular currency and the cap, the market cap. All of those things are what people are supposed to be tracking to know the volume traded and some other details. These are very, very important things. But people don't get to do that. They don't do their own research, what this project is about, and how to get the best of it. There are so many exit scams out there, and sometimes people fall in all of this, getting involved in them. And some of them are pyramid schemes too. So I want people to go to all of those website or CoinMarketCap or CoinGecko to see details and if ask the right question rather than just focused on what coin to buy, because most time people rush when the market is already at the top because there's the euphoria that goes around. Then also some other things I found out that people actually get involved in, they fall for trading signal groups. People just go, tell me what to buy and all, and what to, and these things come up, and they distract a lot of people when we have the bull market. But when you study and ask the right questions, you tend to prepare you for not getting involved when it's already at the peak, because some of these investors must have taken out money, and the market goes down exactly. So, and also there's something I need people to understand. Don't leave your money on exchange platforms. You need to get a hardware wallet, because you see what has happened, bankruptcy here and there from some of these platforms. Then again, I noticed Bitcoin is quite big. It's a successful project. Ethereum is also big, successful project, right? So I have been able to categorize bigger caps medium caps, and micro caps. So the successful projects that are running into billions in market capitalization, right? They're successful, right? And the tendency for them to do 100x, 200x is very, very, very slim. So the worst Bitcoin can do right about now, when we get to the bull market, you're talking about maybe like $200,000 per Bitcoin, or 150, 190, which is quite reasonable, but some of these micro caps that are sitting at $110 million market capitalization can do as high as 100x. But you need to understand the problem they are solving. What problem are they solving? If you understand that critically, you will know that a lot of persons are going to come in and put in these projects are going to scale. They're going to grow organically, and you're going to make some very good amount.
Because it's really hard, that about 8,000 coins and tokens on CoinMarketCap. That's talking about the crypto market. So having to choose the right coins, because you don't want to be a long-term holder, but you're holding something that's like going to be a failed project at some point.
Yeah, I get your point, Ladi, but like I said, what problem is this coin solving? What is the utility? Then you check you check the market cap, and you check the supply of that coin. For example, a coin with very slim, we know there's going to be only 21 million Bitcoin, right? So that is fixed, and I think about 19 million has been mined. So the tendency for the price of that project is for price to go is very, very, very high. So you look for not coins that have a trillion supply or billion supply, something sizable. So and some of these projects have token bond to shrink the amount in circulation. So all of that are things that you need to look at. But it's quite unfortunate that people don't study, and that is why some of us are out there to always give this information out to say, okay, do this. Thank you very much, Ladi.
Yeah, thank you. But talking about trillion supply coins, we saw Shiba Inu, that did extremely well. But Rome, thank you so much. Always great.
That's why it's a meme coin, Ladi. But
a meme coin, yeah. That made a lot of people rich. Thank you so much, Rumi.
Thank you, Ladi. Thank you, Ladi.
All right, now let's look at top of the market cap. Though we see BNB about 0.45%, so it's all green. But XRP, the biggest mover this morning there, it's up about 10.80%. We're seeing the XRP score some points against the SEC there in the US, and we're seeing traders playing to all of that. So that's it for the markets. Don't forget to join us by 1:30 p.m. for Business Incorporated for more updates and developments in the world of business. Remember, you can watch this show again. Just search for Channels Television on YouTube and move over to the video section, and you see all of our videos. Thank you so much for watching. I'm Ladi Williams. Bye for now.